traders, welcome to the TMT Stock Market Strategy video for Friday, November 18th. All right, guys, so the market continues to grind higher. We have a lot of chop, intraday chop, that is, if you're looking at the screens and you're trading intraday. A lot of price movement, really doing not much of anything. And then the last hour, 45 minutes, we get a slow grind higher to make new highs as the S&P did yesterday. There's a lot of danger out there. When I mean danger, meaning that it's a dangerous time to be really piling in long at the moment. There's a lot of divergence, if you will. We talked about it a little bit in the video. I really can't get into it, but my guess and what I'm getting from the charts is that between now and December, sometime in the next few weeks, we get a big move lower. And with that typical move to 2 or 3 days down to get everybody scared, and then that Santa Claus rally kicking in a little bit late, and then we get market sell-off in early 2017 again. I think that's what's going to happen. There's still a lot of uncertainty out there with the Trump organization, what his policies are, and everybody's just assuming that everything is just great and rosy again, and it's not even close to. Fed is really still now they're hinting about raising rates, but there's just a lot of uncertainty out there. We have to be, as traders and investors, be on top of your game. And what I mean by that is not just be looking at the S&P and the Russell, but really a lot of other components that make up this worldwide market that we're in. So first tail that I say use caution is the dollar. And I've been saying it down here in August, July. And I said, don't count the dollar out, guys, because if something happens, anything of kind of fear, they're going to rush to the dollar. Why do you think the dollar is rallying for? Well, the big part of it, there's a couple of other reasons, but the main reason is this is that fear trade going on. They're parking money to the U.S. dollar. Now, this dollar is exploding. If you don't think this trade is for real, think again. If we couldn't, we had 3 swing highs that we had to take out. One was here, right? We took that out here, and then here, which is very big resistance. We cleaned that out with no problem. Let me just zoom in here. So this is not good for the multinationals. Everything now has to be repriced, okay, if the dollar's rising like that. Everything has to be repriced. Can the dollar just automatically fall back to bed? Of course, anything could happen in this crazy market that we're in. And by all means, the market is officially broken. You don't have rallies. We're down 6-7 handles on no move, no news, and the market rallies to be up $2 in a matter of literally a couple of hours, and in a pre-market session. So the algorithms and HFTs have taken control of this market, and it is about 80 to 90% driven by the algorithms and HFTs, aside from the money managers and hedge fund managers that make up the rest of the volume of the New York Stock Exchange and the other indices. So just make note of that, guys. I mean, this market is officially broken. You have a one-sided market, and then once that change, you're going to see how ugly this market gets. Now, when? Who knows? Could be 6 months from now, could be a year from now, could be 2 years from now. But I believe that once President-elect Trump is sworn in on the 26th of January, I think it's going to be a different ballgame. And I think you're going to see some fear. And remember, we haven't had a 15 to 20% correction since the lows of 2009, which is insane. We haven't had a string of down days in years. And that's not a good thing, because we know that the markets are fully inflated. We know that the markets are up here only because of a Fed-induced market that we are in right now, basically that the Fed continually pumping this market up and virtually is almost out of bullets. So you have to be very careful. That's all I'm saying. VIX, another reason why I wanted to show you, we're back down here again at this 12 and a half major areas of support. And every time you get that, you're going to get that spike up. So I do believe in the coming weeks, or even days rather, we're going to have a big move to the downside. We are in options expiration monthly today, so I don't believe and I don't suspect any wild moves at all. If anything, it's going to be a sleeper day again, as it has been for the last several days. And although markets have, on the daily chart, it looks great, most of the moves have happened early in the first 10 to 15 minutes. After the gap up, pretty much goes sideways, and then you get a little short covering rally at the close. Here's another factor that I'm telling you guys to be careful with. The rates. Everything has to be repriced. Now you have rates that are exploding. Now, I do believe that the rates are going to come back in again. Back to the lows, no. But I do believe that we're going to get probably back to the 185-ish area here. You get a couple of days, a few weeks back, pushing rates lower where bonds would actually rally. That's something that we're watching to definitely take care of, okay? So keep an eye on the TLT. If you're looking to trade it, I think there's some opportunity there. Here's the dollar, the UUP ETF, just to show you that we've taken out all of these swings, these swing highs. So this is definitely for real. Yes, we have a gap fill, and even if we fill the gap this way, it's something that I want you guys to really watch and pay and monitor, pay attention. All right, gold. I've talked about gold many times. I've had a few emails saying, no way gold's going to be down at 1200. Well, 1201.30 is the low for today, guys, in a GC contract, okay? So does that mean that gold could break 1200? Absolutely. And if you don't know how to trade the gold, you got to be careful. The characteristics of gold is exactly what happens. Just like this, bam, a big rally, consolidation, boom, another rally, consolidation. And then once that rally teeters out and we have what we call the momentum indicators, right, MACD, stochastics, RSI start to roll over. And that's pretty much it for that move. And once we took out that 1300, 1302 area, you could see here, and I think that we're going to get. I think we're going to move lower. You don't see this now because end of day data, but on Friday you'll see that wick come down if we don't come down again one more time. And remember, a strong dollar is not good for any of the commodities out there. All right, here's the GLD, and here's one of my first targets. Going to be about 114. If we lose this, you could see here, guys, clearly this is not a good sign, at least for gold. And we're talking about gold here for a minute. So if we lose this, look at the thin zone that we have. I pointed out to you this week. We're going to have a big flush right back down again, all right? And that's something that I am going to be monitoring. I do believe gold is still in the second stage bull market, but if we start taking out the January lows, that's all bets are off again. We're going to enter a bear market again in gold. GDX, same thing. Looking for that 61.8% 61.8% target right here, and then we would reevaluate with the GDX. Here's the spiders. And again, crazy. We had a big bear flag, big bearish rising wedge measured down to 185. And sure enough, we gap up that Trump won, and bam, we're right back up to where we started from again. And it's just absolutely insane because if you looked at it, right, we started from the Brexit lows at early July. We've gone nowhere all of July. We had this was the non-farm payroll numbers for August, and we went sideways all of August. And then we broke down here in September. We went sideways all of September. So we've been range bound, right? 3 different range bound trading dates here: July, August, September. And then we sold off a little bit. Now we rallied right back up to the range again. So a very frustrating, and really lack of volatility still. But I do believe that the volatility is going to pick up immensely. Here's the transportation sector, thinking that Trump is going to start moving the small business around, so products are going to be shipped out again, just like those dry shippers, shipping stocks who actually exploded higher and then literally just died. So you got to be careful with these moves here. Same thing with the Russell 2000. The one thing about the Russell, I would be a big buyer of dips in the Russell 2000. I do like the Russell 2000 as a longer term hold. Because the Russell really hasn't done anything. If you looked at a weekly chart, which I don't have, but I'll do analysis on the Russell. I do believe any dips in the Russell should be accumulated, and that's the only sector that I'm looking for as far as the other indices. I do like the Russell out of all of them. And lastly is the Qs. You can see here we had a lot of chops. So just use caution today. I don't think anything is going to happen big. But let's get out of options expiration, and then let's see what happens going into next week. Have a great day, guys. Enjoy the weekend.